Hello and welcome to the Weekly Outlook at XM.com. Next week will be an important one for the markets as there will be a barrage of central bank decisions, starting with the Federal Reserve, followed by the Bank of Japan, the Swiss National Bank, and the Bank of England. I'm Maria Bashir-Davis, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, let's begin with the Fed meeting and FOMC decision coming up on Wednesday. Expectations are for another 75 basis point rate hike. What will investors be looking out for?
Well, Maria, that is right. So that's the consensus among market analysts over another 75 basis point rate hike on Wednesday. But if we look at Fed fund futures, we do see about a 25% probability that the Fed might get even more aggressive and raise interest rates by a full percentage point. That, of course, comes on the back of that last CPI report that we had out of the United States, which came in a little hotter than expected. Although we did see the headline inflation rate moderate in August, it didn't fall quite as much as had been forecast. The real concern, though, in that inflation report was core CPI. We saw the month-on-month increase double from July, from 0.3 to 0.6% in August. And that is one of the things that the Fed has been most worried about, that when you strip out the effects of higher energy prices, we are seeing broadening price increases across a range of goods and services in the United States. So until the Fed is sure that those price pressures are being contained, there is no chance that they're going to slow down the pace of rate increases. But the question is, will they be quite as bold as raising rates by a full percentage point? I mean, we didn't get any hint of such a move prior to the blackout period. Of course, we can't rule it out, but it doesn't seem very likely at this point. That's not to say that the Fed isn't going to appear more hawkish than expected in other ways. For example, they will probably avoid giving us guidance for the next meeting in November. So if they raise rates by 75 basis points only rather than by 1%, and they leave the door wide open for another 75 basis point hike in November, that in itself will be a rather hawkish signal. The other thing, of course, that investors will be looking very closely is the latest dot plot that the Fed will publish on Wednesday. In particular, we're going to be looking to see whether or not FOMC members have revised up their forecast of where they see Fed funds rates peaking. So if that moves up in September, that will also be taken as quite a hawkish shift. So that we could see a negative reaction for stocks on the back of that. And of course, we could see the dollar gaining even more ground.
Turning to Japan now, the yen continues to depreciate in forex exchange markets. What do you think the Bank of Japan is likely to announce at its meeting on Wednesday? Is there any chance of a shift in their yield curve control policy?
Well, it's highly unlikely we're going to get any policy shifts from the Bank of Japan just yet, even though we are seeing inflation headed high. In fact, we do have inflation numbers in Japan coming up on Tuesday. And the core CPI rate, which has now risen above 2%, it's expected to rise to 2.7%. But for the Bank of Japan, that's still not significant enough in terms of being worried about a sustained upward rise in inflation in Japan. At the moment, it's mainly being driven by higher energy prices. So the Bank of Japan, from its point of view, they can afford to maintain their ultra accommodative stance. The problem, though, for the Bank of Japan is the yen. The yen has just plummeted across the board in FX markets. It's really under pressure against the US dollar. It could soon hit the 150 per dollar level, and the government, actually more so than the Bank of Japan, is worried. The Japan's finance ministry, which is responsible for FX intervention, they don't like this sort of rather erratic moves in the yen. They don't see it as reflecting fundamentals. And so we might get some more stronger language from the Bank of Japan on Thursday about the level of the yen in FX markets. The question is, will that make much of a difference? So if say we get some hints of intervention, it might provide some short-term boost to the yen, but a lot of what happens next week will of course depend on what the Fed decides to do. So it's not looking too great for the yen at the moment.
Moving to the Swiss National Bank now, it avoided going down the Bank of Japan route back in June when it delivered a 50 basis point hike. What are we expecting to see now in September, and how might it affect the Swiss franc?
Well, that is right. We did get that shock rate hike last time, and markets are predicting another big rate hike. In fact, markets are split whether we're going to get a 75 basis point rate hike or a full percentage point hike. Now, like Japan, Switzerland doesn't have a huge inflation problem. Inflation is currently running at 3.5%. And so there isn't as much urgency to sort of raise rates rapidly, such as in the euro area and elsewhere, for example. So I'm not sure whether or not we would get a full percentage point rate hike by the SNB, and there might even be dovish surprise in the form, say, even 75 basis point might seem a little bit too much for the SNB. So you can't just rule out 50 basis points. So there is scope for disappointment by the SNB. Most probably they will hike by 75. But in case we do see some disappointment, that would be, we could see the Swiss franc coming under pressure against the US dollar, but probably not so much against the euro.
And finally, over in the UK, Monday will be a bank holiday to mark the funeral of the late Queen Elizabeth II. Later on Thursday, we'll get the Bank of England's decision. Do you think the bank will repeat the 50 basis point hike it made back in August, or will it follow in the footsteps of the Fed and ECB with a 75 basis point hike? And what will that mean for the pound?
I think there's a good chance we will get another 50 basis point rate hike. We might even get 75 basis points. And of course, the language, any tweaks in the language in the statement from the Bank of England, that will also matter as well for sterling. But I don't think the Bank of England alone will be the focus for sterling next week, because on Friday we are going to be getting the flash PMI, so that's going to give us the first clues on how the economy fared in September. And we're also going to have a budget statement from the new Chancellor in the UK. Of course, just before the UK went into mourning, the government had announced its plan about how to tackle the energy crisis, and we're going to get more details on that on Friday. And we might get some other surprises as well from this emergency budget about other measures to boost growth in the UK. The question, though, is even if we do get a very pro-growth budget next week, if the government does little to allay investor concerns about this surging debt level in the UK, that will kind of offset the positive effect on sterling from a very pro-growth budget. So I think investors will, in terms of what's going to set the tone for sterling, it's going to be more about the overall takeaway from next week's event, as far as the impact on growth, the impact on debt, and of course the interest rate outlook.
Rafi, thanks so much. And thanks for joining us at XM.com for this weekly outlook.